These undervalued stocks are worth holding for sustained value creation. These are the undervalued growth stocks to buy with positive business catalysts. NEO. Launch of several new models in 2023 and European expansion. Coupang. Expecting further improvement in adjusted earnings before interest, taxes, depreciation, and amortization margin with operating leverage. Lithium Americas. Game-changing lithium asset is a cash flow machine. Let's dive in. Here are the 3 deeply undervalued growth stocks new to double. Welcome to Timely Investment Research. There have been several multi-bagger stories among growth stocks in the last few years. However, the broad index movement indicates that the last few years have been challenging for growth stocks. It's therefore relatively easy to spot undervalued growth stocks. If we look at the optimistic side of things, it's the best time to accumulate undervalued growth stocks. Throughout the history of stock markets, there have been phases of euphoria and fear. Once sentiments reverse, several growth stocks are poised to deliver multi-bagger returns. Of course, I would not blindly buy any stock that has corrected steeply. Careful screening of fundamentally strong growth stories will boost portfolio returns. Let's talk about 3 undervalued growth stocks that are poised to double. Number 1. NEO. NEO stock has witnessed a steep correction of 52% in the last 12 months. I believe that the stock is deeply undervalued and a sharp reversal seems imminent. It's worth noting that Tesla is already higher by 87% for year-to-date 2023. Sentiments change at the blink of an eye. One reason for NEO stock correction is the end of subsidies by the state for EV purchases in China. This has impacted sales volumes. However, the factor is already discounted in the stock. Recent news indicates that NEO is planning a new factory to build EVs for export to Europe. The idea is to build budget EVs under a new brand. While earnings before interest, taxes, depreciation, and amortization margin will potentially decline, car deliveries will accelerate considering the pricing advantage. I like the fact that NEO has a diversified car offering. Currently, the company has 8 models with another 5 due for launch in 2023. New models coupled with international expansion are deliveries growth catalysts. The company also plans to add 1,000 battery swapping stations in 2023. Overall, business developments remain positive, and I expect NEO stock to witness a sharp reversal rally. Number 2. Coupang. Amidst some volatility, Coupang stock has been in a consolidation mode in the last few months. Coupang stock looks undervalued, and I expect the e-commerce name to double in the next 2 quarters. Later this month, Coupang is expected to report 4th quarter 2022 earnings. That's a potential catalyst for a breakout on the upside. For 3rd quarter 2022, Coupang reported revenue of $5.1 billion. On a year-on-year basis, revenue increased by 10%. However, the key highlight of the results was an adjusted earnings before interest, taxes, depreciation, and amortization margin of 4.8% for the product commerce division. With operating leverage, it's likely that earnings before interest, taxes, depreciation, and amortization margins will continue to improve. Coupang has guided for an adjusted earnings before interest, taxes, depreciation, and amortization margin in the range of 7% to 10%. From the perspective of revenue growth, the Korean e-commerce market was valued at $196 billion in 2021. The market size is expected to swell to $291 billion by 2025. This leaves ample headroom for growth within Korea. Coupang has also been exploring entry into Southeast Asian markets. Number 3. Lithium Americas. Lithium Americas is another attractive name among growth stocks to buy. Lithium Americas stock has remained largely sideways in the last 12 months. However, with positive business developments, the stock seems poised for a meaningful rally. A major development for Lithium Americas announced a $650 million investment from General Motors. The partnership is for the joint development of the Thacker Pass project. Just to put things into perspective, the asset has a mine life of 40 years and an average annual EBITDA visibility of $1.18 billion. Lithium Americas also has a 44.8% stake in the Caucherry Olaroz project in Argentina. This asset has an average annual earnings before interest, taxes, depreciation, and amortization visibility of $308 million. Lithium Americas has announced the split of international assets into a separate entity, Lithium International. The impending split is likely to unlock value. Overall, Lithium Americas stock is a potential multi-bagger. Considering the demand scenario of supply for lithium, positive tailwinds will sustain well beyond the decade. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.